The stock market bubble has been going on for close to a month now already, and you guys have a front row ticket to watch it happen. Stick around, today should be a great video. Hello, my YouTube friends. My name is Adam Kahn, and this is Investing with Adam K. So, what the hell am I talking about? Here's a guy who's been consistently saying how bullish they are and buy the market, and my opening to the video is talking about the bubble and how we've been watching it happen before our eyes. Well, you have to pay close attention to what's going on, and I'm going to use some examples today to show you where I see a bubble because the market is popping. It's just not popping everywhere, nor do I expect it to, which is where valuation and doing a little bit of research onto what you're buying is so important. If you look at companies like Rigetti or Oklo, OKLO, they are in a bubble, and my heart tells me it's going to continue. I expect Oklo to continue to fall, and maybe those are companies that we shouldn't be owning because they're not profitable, they're losing money, and it's bets on things that we think may happen down the road. And down the road might be 10 years from now. So giving it a valuation today of what you hope it might do in 10 years is kind of crazy and goes along with what happened in the dot-com bubble. So Oklo, for example, and I use it because it's a company I bought. But understand, I bought it as a flyer, and that's not to justify it. It's to explain that I didn't expect it to do what it did, and now that it's doing it, I should sit back a little bit and recognize what I think is going on. Now, as always, this is not financial advice. You shouldn't be listening to me, or for that matter, I don't think anybody on YouTube. I am not a financial advisor. You really should be doing your own research and reaching out to your own financial advisor when making decisions on your investments. Now, I bought Oklo simply because the guy who got appointed to the Department of Energy was on the board of Oklo, along with Sam Altman. Now, that does not mean anything about the fundamentals of the company. And while those companies seem to be correcting and could possibly go a lot further, other companies, and I'll use Nvidia because maybe you want to make an argument that they're overvalued, or even Netflix with what's going on, or any of the others, it is not the same scenario, and I don't see a bubble happening with the heart of the market. Unless we have some black swan event that causes some huge job loss and we have massive unemployment, I really don't picture a scenario that changes the narrative of what's going on. They're going to continue to make everybody nervous no matter whether the Fed cuts rates, raises rates, does nothing. Whatever goes on in the future, people always have a tendency to be scared. That narrative probably continues going forward, and that is good for the overall markets. Maybe something happens, maybe my thought process of when this administration comes to an end, we'll see a correction. But I only see that if we see a huge parabolic move up beforehand, which we haven't really seen. We've seen a much healthier market where from time to time it gets nervous, has a good pullback, seems to catch itself, and continues forward. Now, if you look at a company like OKLO, it had a huge run from $20 a share to over $190, and it is already back below $100. If it is the air coming out, when that happened in 2000 with the dot-com bubble, or forgive me, yes, the 2000 dot-com bubble, well, some things corrected 90%, some went out of business, and some had natural pullbacks because it was such a big move. I don't really think that happens this time, since the companies that are having the drawdowns are much smaller percentages of the actual economy, the S&P 500, which a lot of them aren't even a part of. I don't see it having an overall bad, I don't even know the word I'm looking for, but I don't see it being as big a deal as it was back then because it's such a smaller piece of the actual stock market. But I do see a scenario where these companies could go out of business or drop 90% or whatever they end up doing. And understand that was in 2000. We are 25 years later before the markets have done as well as they have. So it could take a very long time for a lot of these companies that did, in fact, in my mind, go through a bubble type period to actually catch themselves and wash out and become whatever they become in the future. So now what does that mean for you and I, and what should you do differently? As far as I'm concerned, that means absolutely nothing. If I were going to invest in a company like Oklo because I was taking a shot, I still would. But I would be more aware and more in tune that really it could be going through a serious correction and not just a normal pullback. At the same time, if I were investing in Amazon or Google or Conagra or Target, which I know how much you guys love. Target. I think I have to say something about Target now in every video, which seems to be getting some signs of life despite the negative news. But if you're investing in those companies, there's nothing wrong with them. Everything seems to be fine. Their earnings are doing well, and a lot of them seem to continue to grow. The narrative on TV about how overinflated everything is and the PEs and everything else, well, if you look at some of the smaller companies like Open Door or LAC or Oklo, which we talked about, or Rigetti or Iron or some of the others, maybe they still have a long way to go to the downside. If they don't have real revenues, if they're not driving profits, if those revenues aren't growing, and you're betting on quantum computing that may take 5 years, it may take 20 years, those types of things may have a long way to go to the downside while the overall economy may do just fine. So I guess we'll just have to wait and see and play it out and see what goes on. In the meantime, I talked about it yesterday. I'll talk about it again. I really do love the merger of Netflix. I know a lot of people hate it. I think it's a really good integration for their current, what they own versus what they're adding onto the portfolio. I think the reason they overpaid so much is that really adds to what they are and creates a scenario where they can become more than what they currently are. And it also helps eliminate some of the competition. It gives them a real history by picking up some of these older franchises that have been around a long time. Like you add something like Batman to your portfolio, or what's the one with the kid who Harry Potter. I can't believe that I couldn't think of Harry Potter. But you add those to your portfolio when your Netflix, as a user of Netflix, one of my biggest complaints is that their portfolio isn't that great and they don't have some of those movies mixed in. You immediately add all that stuff to their portfolio, and then you give them all the physical attributes of having the studios to be able to do new films in, potentially actually do blockbusters that they send out to the theaters, or skip the theaters altogether. I'll pause while they do that. I'm still here in China. I think Netflix has great content in terms of their shows, but I haven't really loved a whole lot of their movies, even though some of them have done well. This opens the door to be able to push things out to the theaters if they choose to. Now, Hollywood's very nervous because they think they're going to skip that and pull out a big portion from the Warner Brothers side of movies that come out to the theaters and go straight to the videos. Well, maybe they do, and maybe they go to digital. But if they are, I think that's an indication of the times more than anything else, and you don't want to fight technology. The reality is this opens the avenue that they actually might go to the theaters if they choose to. Maybe they release something for a shorter amount of time, but maybe that's all you need to make it exciting. And look, I have Netflix, I enjoy it, I watch shows on there. If I am buying a movie, I tend to buy it on Apple just because I have a big portfolio there and there's no reason not to add on to it. But I still enjoy going to the theater. There's nothing like the big screen and the sounds that they have and the chairs and everything else, and they've gotten better about implementing those bigger, more comfortable chairs in a lot of them. And if it's a blockbuster movie that a lot of people are anticipating, just like a sporting event or anything else, there's nothing like being in the theater where other people are. I think the reason that Netflix overpaid, so to speak, is primarily because they have something in mind that they can use the pieces for, and they see value in it. I think when we look back in 5 or 10 years, it's going to look like a steal, and people are going to talk about how smart they are, as opposed to when Warner bought AOL, if I remember correctly. But I just don't see this as some total overpaying, and I love that the market hates it because it's created opportunity for me to buy some of the shares on cheap prices. At least that's how I feel. Now, hopefully I edit well enough that the pauses and stops aren't too bad. Every now and then they do the work upstairs and it gets pretty loud. I forgot my microphone, so I'm stuck without them, and here I am in Fushan, China, so makes it a little bit more difficult, but I still want to do these videos. We're on our way to Guangzhou. Now, on a separate issue from the bubble that I talked about and what I see going on, tomorrow for you guys, and I think, no, tonight for me, I think after the bell, we're going to hear from both Oracle and Adobe, which I am very excited to hear from. Both of them have had significant pullbacks, so what I'm hoping to see is a reversal. They've both kind of drifted higher. I want to see that continue after the earnings. I think the negative sentiment on Adobe in particular has been so bad that it's really overdone at this point. Again, not financial advice. Please don't do anything I'm doing. I did start a small position in Adobe, which is very tough for me because I actually agree with a lot of the negative sentiment and why it's there. But I think it's a little overdone, and I still think, at least for now, they're a good company, and I don't want to ignore the fact that they're continuing to grow despite the things that I see as a fear. So what I worry about with Adobe is as AI gets better and better, and as technology gets better, it becomes easier for people like you and I to be able to do, whether it's editing or graphic design or whatever it is that Adobe offers on other platforms that just make it really simple. I mean, even on ChatGPT, I was able to take a picture of my kitchen, ask them to change the color of the countertops and do some other things to see what it would look like if we remodeled. Super cool, as opposed to learning all the technicals of having to do it on something like Adobe where it's way more difficult. Now, that doesn't mean Adobe may not be able to shift and do a combination of both where AI actually helps them, and in the meantime their earnings have been doing just fine. I do worry about this stuff. That is kind of what's been driving their stock price lower. However, I just think it's been overdone based on their actual valuation and the money they make and their revenues. If we get another good quarter, I'm hoping enough has been washed out that it really could reverse and start going higher, similar to what's happened with Salesforce, which is another one that I have the same feelings about, who seems to have already turned the corner. That's my thought process on Adobe. Now, I think I mentioned it, full disclosure, I did start a very small position in Adobe ahead of their earnings, and figure if it drops, I'll decide what to do from there depending on how the earnings look. And if it just spikes higher, well, I have on less than I normally would. Oracle, on the other hand, I've built up a decent sized position already, mainly because the pullback after the last quarters have been pretty significant. They had a great quarter last quarter. Now, the earnings didn't blow it out, but the projection for what's going to happen going forward based on their relationships was incredible. I think that the market realized maybe it got ahead of itself, similar to what I talked about with some of those crazy investments, but Oracle is not so crazy because they have actual earnings and everything else, but they also drove really high, really fast on promises that were coming from Ellison about what they're going to do in the future. I think they want to see a few quarters of actually seeing those types of revenue and those things happening to be more comfortable that those valuations are correct. Now, that being said, the stock has already pulled back to below where that quarter report came out, where I think that becomes a really good value at this point. On top of it, when I look at a chart, it's kind of hitting the top of an area where it had spiked up to about 6 months ago before it fell down and then went back up. I think it's actually a good level in terms of the charting to maybe take a shot on. Again, as always, like I said earlier in the video, and I repeat again and again, and I'm sure it drives a lot of people nuts, this is not financial advice. You need to do your own research on this stuff. You should not be following me. The reason I did that with Oracle, though, is if there's a confirmation on this report that what came out on last report is accurate, I'm hoping we might see the same type of move that we had on the last report and really shock everybody and catch anybody who got out of the stock that they're just never going to get back in. Now, who knows? Those are just my trader instinct, not my analysis on the fundamentals for Oracle. I just like the chart and the behavior of the stock price. It went all the way up, it's come all the way back down, went below those numbers by a significant amount. So anybody who bought it after last earnings has gotten beat up, even if they were good and bought it a little bit beforehand. But God forbid they bought it at the end where it got above 300 and even spiked above that. They're really getting clobbered, and it's hard to imagine if they're a short-term trader or somebody who didn't expect that type of a pullback that they've been able to hold on this long, even though it's only 3 months when I say that long. Which is why, for the most part, I expect people to buy things that they want to own for 10 years and not worry about these short-term moves. I just notice it as a guy who likes to trade. It's not in my investment account where we talk about my set it and forget it, and I'm happy to discuss this. Anyway, China trip. Boy, am I a moron. Running out to China thinking it would be so easy to just buy some furniture, send it back. It is such a headache and so much different than I expected. Thank God my wife has family here. Thank God my wife has family who know people and able to help out. Otherwise, it would have really just turned into a vacation. Anybody who's thinking in the back of their head, oh, that sounds neat, maybe I'll go do it. I gotta tell you, they see foreigners and we are just like sucker, and there's no way you're going to end up in a good position. Quite honestly, really, if we didn't have her family helping us, we would have come here, we would have been disappointed, we would have had some good lunches and dinners and gone home. Now, we're off to Guangzhou to look at some other things, and who knows what we'll do there. My guess is it's just going to turn into a vacation, and since we still have another week, we might take a train to I don't know, we might go to Hong Kong, or we might go to potentially Macau or somewhere else and check out some of the areas, just because now her uncle and her aunt went back home, so I don't think we'll be buying any more furniture or doing any of it. And oh my God, they sell you the furniture even if you get a deal. Here's the funny thing, you get the deal, they all say we have tons of people that can help in shipping, and whoop, well, sort of, and it's super expensive, and they're going to charge a ton to ship it back. Now, again, thank God for my wife, because her mom used to work in the port in Qingdao, so she called up a friend who still lives there and works in the port still, and was able to at least give us some direction on people to talk to and get the pricing to where it should be. In the end, we ended up getting some beautiful furniture at a great price that was better than what we could have in the US. On top of it, some things like the quality of the dining chair, when I say that they're real wood, they're heavy as can be. You just can't find that at home. Because we bought dining chairs that are just incredible. Even when I go to somewhere like Restoration Hardware that I think makes a decent product, but then I see their prices and I almost have a heart attack, but at least they stand by it and they do a good job. It doesn't compare to the stuff that I found out here in terms of quality. The craftsmanship and how it's put together, and how it's real wood all the way through instead of press board with a sheet of laminate on top or something like that. That's what I really enjoyed and what we were able to find. The only thing that I regretted not getting was a sofa that I found that my wife looked at me and almost punched me when we saw how expensive it was, because to be fair, it was really expensive, but oh my God, it was such a beautiful sofa. I'm going to try to do the picture in the picture right there to show it to you. And I know it might not look like much, but oh my God, it was like made out of suede. The leather was just incredible and unbelievably soft. I could not find anything like that in the States, and if I could, it probably would have cost the amount of a house. Now, my wife wouldn't let me get it. She just said it was too expensive, but I'm sure I'll get home and regret it, and I'll keep my mouth shut because I don't want her getting annoyed. She doesn't watch the video, so I'm not worried about anything here, but to be fair. Now, I'm curious what we're going to see in Guangzhou. I'm guessing it's a bunch of junk because it's all the secondhand stuff that, quite honestly, I find interesting, and it's supposed to be decent quality, but we don't really buy that stuff. And some of the sales pitch gets a little bit annoying when you walk through those malls, because I'm just going to keep talking this time, because they really come after you like some of those other markets where they're trying to sell so hard, and we're really just going to look around and have fun more than anything else. I'm not one of those guys that goes around to those secondhand markets and starts to bargain. But when I've seen the videos, I thought it would be fun to try to do that. Although, interestingly enough, I think they've cracked down on that because it gets them in trouble for selling things they shouldn't be selling. Either way, I just kind of like to walk around and look. Sometimes I'll buy, like, cords to charge things because they'll be really inexpensive, or my wife bought, she had it delivered. It was really funny. The things that are really interesting are like the screen protectors, because I think they're made out here, and she bought a screen protector and spent something like $1.50 for it, and then we were walking down the street and she saw somebody selling it for 15 cents and was all annoyed with herself, and I'm like, but honey, they delivered it, you got a pack of two and whatever else, and it was still super cheap. So I think it'll be fun out there, but I'm not sure what we'll see, and I know we're not really planning to buy anything, which is why we may end up going to Hong Kong or Macau or somewhere else and just seeing what else is out here. Really, since her uncle and aunt left, I don't see us getting any more furniture because our connection is through them, and it might be a little bit more difficult. Anyway, as always, I hope you guys enjoyed the video. Do me a favor, hit that subscribe button, smash the like button, make some comments in the comment section. If there's any stock you want me to look into, I'll be happy to check it out when I get back home. We'll be home in about 10 days.